Hey, everybody. Welcome back to Chipstock Investor featuring Nick and Kasey with matching jackets.
They're different brands, but that was unintentional. That we kind of are dressed basically the same.
We're not here to talk about our jackets, actually. We're here to talk about Google. We're going to focus on these 3 key points. Google is planning on acquiring Wiz, a cloud cybersecurity company, and that's really interesting timing due to that Department of Justice finalization of the ruling, remedies for Google search ad dominance. We'll discuss that and what that means for Google as well as Apple, because the game has really changed. Mobile is so 2010s.
Yeah, the game has changed indeed. We are now looking at data centers as a means of distribution and monetization. You probably already got that memo, something you already know. Apparently the DOJ still operating like it's the 2010s. So here's that announcement that Google made that they're going to acquire Wiz. They tabled this acquisition last year. The rumors were that they were trying to get Wiz for $20 billion. Wiz probably scoffed at that. Google came back with a $32 billion bid this time, and Wiz's founders, who were going to cash out a few $1 billion, said yes to that deal. So I think everybody focused in on the price tag itself, $32 billion, which could be perhaps 30, 40x times Wiz's trailing 12-month sales of less than $1 billion. We don't know exactly what they make. It's a private company, but there were some overlooked aspects of this deal. First of all, Wiz is a CNAP platform, and that is a perfect fit for what Google is trying to do with Google Cloud.
Google does already have some cybersecurity services. They acquired Mandiant a few years ago. This acquisition of Wiz by Google is to expand that cloud cybersecurity. And as they explain in this press release, this will allow them to accelerate 2 large and growing trends in the AI era: improved cloud security and the ability to use multiple clouds. Very important. Both the cybersecurity and cloud computing are rapidly growing industries with a lot of different solutions. So, of course, when we think about this, we're thinking about the increased role of AI and the adoption of cloud services from enterprise as well as retail customers.
And especially, what Wiz does, CNAP, which stands for Cloud Native Application Protection Platform. That's a really important service when we're talking about AI and multi-clouds. A lot of companies trying to train and embed new AI into what they do every day. But their data is scattered all over the place. And so this is where multi-cloud becomes really important, because there's a lot of data that's beginning to move between different data centers. That's essentially what we're talking about when you hear that word multi-cloud. It's moving data from one data center location to another. For example, it could be moving a company's on-premises data to Google Cloud, or it could be migrating data that they have in an Oracle Cloud to Google Cloud and then back again, or whatever the company's specific needs are. All of that movement of that information needs to be protected. And of course, the AI utilizing that data also needs to be protected. So this Wiz acquisition actually has a much bigger overarching theme to it than what often gets overlooked here when everyone's focused on that $32 billion price tag. So these are proposed final judgments against Google from the Department of Justice to remedy their dominance in internet search and then the ads empire that Google has built atop of that. Kasey, why don't you walk us through these proposals that the DOJ has submitted, their final proposal to the court?
There is a number of proposals that are made, but we'll just focus on the first few here. Prohibiting Google from making search-related payments to Apple and non-Apple search distribution partners. And we've done a video about this actually in the recent past. Maybe actually it's probably been about a year ago now that we did a video outlining some of the payments that Google makes to Apple. We'll link that here. The second item is the proposal of Google to divest Chrome, a critical distribution point to shield against self-preferencing. And then besides the search-related payments to Apple, the divestiture of Chrome, there is also a contingency plan for divesting the Android operating system and Android services.
Yeah, all of this is very complicated. The court will ultimately make the final ruling. It probably isn't going to be exactly like this DOJ proposal. And honestly, all of this is very much operating as if we're still in the 2010s, but that's probably just a completely different topic entirely. Let's maybe just talk about for a moment here what would happen for Google if they did have to divest either Android and or Chrome. They're going to probably pocket a lot of cash from that divestiture, right?
Yes, absolutely. When you think about the market share that these two products offer, Google Android operating system devices in use worldwide over 3 billion, which is over 70% of mobile market share. And then Google Chrome web browser users over 3.4 billion, which is over 60% of the web browser market. There's a lot of people using these products, and if they were to divest it, they're going to be getting a pretty penny for it.
Yeah, honestly, if they divest it, let's just say Chrome, just Chrome gets divested. I imagine that alone probably pays for the Wiz acquisition, or perhaps a pretty good sized chunk of the $32 billion price tag. And so it's interesting, it's been mentioned here that this is going to put a pretty good sized dent in Google's balance sheet, which, let's face it, it's not going to be that big of a dent in Google's balance sheet if they acquire Wiz for $32 billion. But it's nevertheless interesting timing here that Google is saying, okay, if we do have to get rid of Chrome, no big deal. We're just going to go back to Wiz and make that deal happen.
We're going to show you a series of charts on how this could affect Google as well as Apple, all made with the sponsor of today's video, finchat.io. First chart, Google's balance sheet. As Nick said, they have plenty of cash and long-term investments and very little in the way of long-term debt. Now, if you want to make charts like this one, as well as all the others, you can check out the link below, finchat.io/CSI. That link gets you 15% off any paid plan.
Yeah, Google, one of the deepest pocketed, if not the deepest pocketed organization on the planet, with well over $120 billion in net cash and investments on balance. When you subtract out that small 10, 11 billion bit in debt, the part of the chart in red there. So Wiz, actually for Google, not that big of an acquisition, possibly getting more cash if they do have to divest Chrome. And so this all feeds into the point that the game has actually changed. Mobile devices obviously are not going away. The importance of them and a means of monetizing the internet is not going away, but the game has changed the last few years. The next wave of revenue generation from the world of tech is actually from data centers and from the cloud.
Here's Google's cloud revenue and operating income on an annual basis. The cloud revenue has continued to increase year over year. This most recent year, ending in December, $43 billion. And they're finally bringing that operating income up. Now it's at $6.1 billion in 2024. Now compare that last chart with Google's all revenue breakdown. Google Cloud is a very small piece of the pie in comparison to Google Search and their ad revenue that they get from that. However, if they have to divest one of these segments, including Google Chrome, the cloud revenue could become a bigger portion of the revenue generating machine. And that acquisition of Wiz could even help propel that even further.
And another part of that DOJ proposal, Kasey, was, and that we called out in the video you mentioned from almost a year ago, was part of the way Google is able to acquire all of this ad revenue is it pays companies like Apple to be the default search engine on iOS, for example. And this is what Google calls traffic acquisition costs, or TAC. They spent $55 billion on these acquisition costs last year. What amount of that goes to Apple specifically? You can see the video from last year. We break down the general equation and how you can calculate it for yourself. Here's the equation in very simple terms here. Google's annual TAC multiplied by Apple's market share of devices. Of course, you have to exclude China from that equation because Google doesn't operate in China. But those two numbers multiplied together gets you the annual payment to Apple, which probably came out at somewhere around 22, maybe $23 billion in 2024. If Google stopped making this payment to Apple, it would hurt Google's ability to monetize its search and its ads that are based on search, but also the traffic acquisition costs would go down. So it may not be that big of a deal for Google but it would most certainly be a big deal for Apple, right?
Yes, it absolutely would be a big deal for Apple. Of course, most of their revenue comes from their devices, $200 billion just in iPhone revenue alone. But in the last 12 months, 99 billion was from services. And included in that service revenue is that payment from Google.
That payment from Google, their TAC, is highly profitable revenue for Apple. Let's just call it maybe not pure profit, but probably 60, 70% at least profit. And so here's Apple's operating income, their total operating income. If they had to take a $10 to $15 billion hit on their operating income, if they lose that Google TAC payment each year, that's going to set Apple back a few years worth of progress on their operating income and pretty sizable hit to the operating income profit margin as well. Not the end of the world, but the game has changed. Google possibly sees maybe the days of this game being numbered. And so the switch to data centers as the primary means of monetization now is very much the signal that is being sent with this post takeover of Wiz. So that's a wrap for this story that we told using FinChat. Check it out, finchat.io/CSI. But again, about that game having changed, mobile devices will continue to be a primary source of revenue for big tech. But as they continue to invest more in data centers, the monetization of those data centers via things like AI applications or AI features embedded into applications is going to be like the next lever, the big profit center that these big tech companies are going to pull on. And by extension, not just big tech, but enterprise software companies in general, and also businesses that are starting to finally invest more seriously into the cloud and data centers because the return on investment is really that good. So this is the big shift that is currently taking place.
Of course, this is a ever-evolving situation, and we'll keep you updated here at Chipstock Investor. If you haven't yet, check out our Semiconductor Insider membership. Just $10 a month gets you access to our Discord server, where we've had updates on this topic and many others before we can make a video on them. Check it out, link below in the description. Of course, hit the subscribe button, share with your friends, like the video, all that good stuff. We'll see you all again soon at Chipstock Investor.